Welcome back, everyone, and thank you for joining me today for a very important and in-depth discussion about one of the most overlooked, yet potentially game-changing opportunities in the market right now. While most of the world remains distracted by headlines about the next big artificial intelligence model or breakthrough software, very few investors are paying attention to the companies quietly building the massive infrastructure that actually powers this entire revolution. Today, we are going to take a deep dive into Applied Digital, a company that is rapidly positioning itself as a cornerstone of the AI economy, and one that has just secured an astonishing $16 billion revenue backlog that could fundamentally reshape portfolios over the next decade. What we are witnessing right now is nothing short of a tectonic shift in how markets operate, and Applied Digital is not just another data center company. It is becoming the high-voltage backbone of the generative AI revolution. In this video, we are going to break down exactly why institutional investors, often referred to as whales, are aggressively defending this stock, how their recent $2.5 billion financing round changes the entire trajectory of the company, and why the current market volatility may actually be creating a rare capitulation zone that long-term investors simply cannot afford to ignore, especially if your goal is to scale and build real wealth over time. This video is for informational and educational purposes only and should not be considered financial, investment, or legal advice. I am not a licensed financial advisor, and all opinions shared in this video are based on personal research and experience. Investing in stocks, including Applied Digital or any other asset, involves risk, and you could lose some or all of your investment. Always do your own research and consult with a qualified financial advisor before making any investment decisions. Do not invest money you cannot afford to lose, and make sure any investment fits your personal financial situation, goals, and risk tolerance. The market is highly volatile, and past performance does not guarantee future results. Before we go any further, it is extremely important to remember that all stocks carry risk, especially in a volatile market environment like the one we are currently experiencing. You should never allocate more than 5% to 10% of your portfolio into a single stock, and you must always ensure that any investment aligns with your personal financial goals, risk tolerance, and long-term strategy. With that said, Applied Digital's recent performance has been nothing short of explosive, with revenue surging approximately 250% year over year, and the company locking in 15-year leases with major players like CoreWeave, which effectively act as long-term stable cash flow engines, potentially worth billions of dollars over time. These types of agreements are incredibly rare in the technology sector and provide a level of predictability that many high-growth companies simply do not have. On top of that, we are also going to discuss actionable strategies, including how institutional investors are positioning themselves, how geopolitical tensions, particularly those related to Iran, are influencing short-term price movements, and how strategies like selling put options can potentially be used to both accumulate shares and reduce your overall cost basis in a disciplined way, sometimes generating hundreds to thousands of dollars in premium income depending on position size. Personally, this is a strategy I have been utilizing to gradually build my position while taking advantage of the volatility. And for those of you looking for a structured plan to turn uncertainty into opportunity, you are absolutely in the right place. To summarize what we will be covering, this is not just about a stock pick. It is about understanding a blueprint for navigating one of the most important technological shifts of our time. Applied Digital is not a software company chasing trends. It is a company designing, building, and operating high-density data centers specifically engineered for the extreme demands of modern artificial intelligence workloads. Traditional data centers simply cannot keep up with the heat generation and power consumption of today's advanced hardware, especially with the latest GPU architectures requiring more than 100 kilowatts per rack, representing infrastructure investments that can cost millions of dollars per deployment. Applied Digital, however, has built its entire model around solving this exact problem. Their facilities incorporate advanced liquid cooling technologies and are strategically located in regions like North Dakota, where access to power and efficient cooling provides a massive cost advantage, potentially saving millions annually compared to legacy providers. This positions the company as a true picks and shovels play in the AI gold rush, meaning they are supplying the essential infrastructure that every AI company depends on, regardless of which software ultimately wins. What makes this even more compelling is the company's focus on long-term stability through 15-year contracts, effectively locking in massive predictable cash flows that can total multi-billion-dollar revenue streams over the life of each agreement. This is what makes Applied Digital such a unique opportunity. It combines the explosive upside of AI with the foundational stability of infrastructure. In many ways, they are not just participating in the AI revolution. They are building the physical foundation that allows it to exist in the first place. While others are speculating on which AI applications will succeed, Applied Digital is ensuring that all of them have the power and space they need to operate, something that could be worth tens of billions of dollars as demand continues to rise. Now, when we look at the financial side of the business, the growth becomes even more impressive. The company recently reported quarterly revenue of approximately $126.6 million, representing a staggering 250% increase year over year. Despite concerns from some investors regarding geopolitical tensions, particularly involving Iran, it is important to recognize that Applied Digital operates primarily as a domestic United States infrastructure provider. In fact, as nations begin to prioritize sovereign AI capabilities for national security reasons, companies like Applied Digital may become even more valuable, not less, potentially unlocking multi-billion-dollar government and enterprise contracts in the future. Looking ahead over the next 1 to 2 years, as major projects like their Heartwood campus come fully online, the company is on a clear trajectory toward reaching a $1 billion annual revenue run rate. This kind of scaling is supported by long-term contracts, ensuring that short-term macroeconomic noise does not derail the broader growth story. Of course, we also need to address the concept of the capitulation zone, especially in the context of current geopolitical uncertainty. Historically, events such as rising tensions with Iran can trigger widespread fear in the markets, leading to indiscriminate selling where even high-quality companies get caught in the downturn. This creates what is known as a capitulation zone, a price range where panic selling peaks and institutional investors step in aggressively to accumulate shares. For Applied Digital, this zone appears to be in the range of approximately $23 to $25 per share, where strong support has been observed. Understanding these levels is crucial because it provides insight into where smart money is positioning itself, and it can help retail investors make more informed decisions rather than reacting emotionally to market volatility. A move from these levels back toward analyst targets could represent double-digit to potentially 2x upside, depending on execution. When it comes to earnings and future growth, Applied Digital has consistently demonstrated its ability to outperform expectations, recently delivering revenue figures that exceeded analyst estimates by a significant margin, nearly 46% above projections. The company's long-term vision is equally ambitious, with plans to scale up to 5 gigawatts of total capacity by 2030-2032, representing infrastructure investments that could be valued in the tens of billions of dollars. Importantly, this is not just a theoretical goal. They have already secured the financing and land necessary to execute on this expansion, which significantly reduces execution risk. Their ability to build large-scale infrastructure projects while maintaining strong margins is one of the key factors that differentiates them from competitors and reinforces the bullish case for the stock. The investment community is also beginning to recognize this potential, with several analyst firms issuing upgrades and price targets that reflect a much more optimistic outlook. Some projections go as high as $53 per share, with a median target around 42.50 cents, suggesting meaningful upside from current levels. These upgrades are largely driven by a shift in perception, As Applied Digital transitions from being viewed as a crypto-related business to a pure-play AI infrastructure company, which typically commands a higher valuation multiple and could justify multi-billion-dollar market capitalization expansion. As more of their data center projects move from development into full operation, generating consistent cash flow, this narrative shift could act as a powerful catalyst for future price appreciation. On a broader scale, it is also important to consider macroeconomic trends and how they influence the market. Factors such as oil prices, global conflicts, and overall liquidity conditions all play a role in shaping investor sentiment. Historically, markets tend to recover quickly once geopolitical tensions ease, and interestingly, the cryptocurrency market often acts as a leading indicator for technology stocks. When liquidity begins to return to digital assets, it often signals that a broader recovery in tech equities may follow, potentially unlocking billions of dollars in capital inflows back into the sector. Understanding these relationships can provide a strategic edge when positioning for the next major move. At the end of the day, the key takeaway here is that opportunities like this do not remain hidden forever. The AI revolution will continue to advance with or without individual participation. But the greatest wealth is typically generated by those who recognize and invest in foundational infrastructure before it becomes widely understood. Applied Digital represents more than just a stock. It is a strategic asset in an increasingly data-driven world where compute power is becoming one of the most valuable resources on the planet, potentially worth trillions of dollars globally over time. You now have a clear understanding of the company's $16 billion backlog, the institutional support levels, the growth trajectory, and the broader market dynamics that could influence its performance. If you found this breakdown helpful and want to stay ahead of major opportunities like this, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss an update. Your support helps the channel grow and allows me to continue bringing you high-quality, in-depth analysis. Thank you for watching, and I'll see you in the next one.